Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Still a very choppy time out there for equities. We're still sort of caught in the grips of this sort of trade war, and really sort of quite interesting to see the US's reaction, having imposed trade tariffs on certain goods from China. They then were sort of surprised that China has then sort of turned around and imposed tariffs on US goods coming into China. Really, sort of pretty naive from the US administration if they thought that China wasn't going to retaliate, and really maybe just shows the sort of lack of foresight and lack of planning that's gone into this. It sort of seems, sort of off the cuff, sort of typical Trump, comes out with a tweet, enacts the policy almost the next day. Surprised to see what the reaction is from the opposing party. Also quite interesting as well, if you look at so far the sort of trade tariffs he's put on that been running the longest, sort of steel and aluminum. They're sort of starting to hurt these sort of states that he carried in the election. Rather than sort of bringing jobs back to the US, it's actually sort of putting up costs and costing American citizens their jobs. So it's going to be interesting to see how this sort of plays out. We've got sort of midterms coming up in November as well. And at present, if it continues like this, I suspect the Republicans will do pretty poorly. Interesting though, the data coming out of China still pretty robust. PMI was up and showing some pretty reasonable growth going forward. So it's just going to be very interesting to see how this sort of trade war negotiations sort of take place, and whether we do actually get some decent trade deals coming out of it, or whether we get into a full-blown trade war. The other issue sort of dominating certainly US equity markets and by sort of default global equity markets is sort of the heavy bashing that tech stocks have received over the last sort of couple of months. Again, Trump has been very sort of vocal and pretty sort of loud in his criticism of Amazon, and that has taken quite a bit of selling pressure out there. Maybe some of the cynics have sort of commented that Trump, coming from a real estate background, it's the bricks and mortar retailers that are getting hurt by the sort of online retailers like Amazon. Maybe he's just trying to sort of stick up for his own corner. Again, sort of going to be very interesting to see how this sort of plays through. The other issue, though, has been obviously with this, sort of huge rise in sort of ETFs, index stocks that are trading on the various exchanges, where they just look to replicate the index. They've obviously got quite a high weighting, certainly in the US, to tech stocks. And then obviously, as you're starting to see a little bit of pressure coming on these tech stocks, if people are starting to withdraw their money from the ETFs, that then leads to a little bit of selling pressure, which then just becomes a sort of ever increasing sort of circle, and there's sort of more pressure coming through. As sort of prices go down, more sellers come through, prices go down, more sellers. That is maybe one of the disadvantages, obviously, of just having an ETF that replicates an index. On the fund manager side, obviously your stock pickers out there are looking at the individual equities and the individual fundamentals of various companies, and sort of cash flow, etc. And view that the sort of sell off and the sort of lower prices as good opportunities. So again, it'll just be interesting to see how that sort of plays through over the next sort of 3 to 6 months. It'll just be very interesting to see how that sort of plays through with the earnings season coming up. Last quarter earnings were a little bit disappointing. It's just going to be interesting to see if there's been any pickup. Certainly most economists and analysts were looking for a little bit of a pickup over the next sort of 3 to 6 months. Geopolitical pressures obviously still out there as well, with the ongoing situation with the Russian poisoning in the UK. Various sort of diplomats being expelled left, right, and centre. Russia, of course, has had nothing to do with that. It was totally out of their hands. The poisoning of the two Russian citizens in the UK. But certainly there is a bit of tit for tat going on out there, and again, it's just going to be interesting to see how that sort of plays through. Certainly at the moment, most fingers are pointing at Russia, and most of the evidence seems to be pointing at Russia as well. Oil sort of holding a reasonable bid around sort of 65 on WTI, just around 70 on Brent. And again, commodities at the moment are sort of holding in there. But potentially if you get a full-blown trade war, potentially that could sort of slow down global growth. And if that does take place, then obviously that's a little bit negative for commodities. Here in New Zealand, the economy's sort of doing okay. We've got the new Reserve Bank governor in place now. He's got that sort of dual mandate, so it's going to be interesting to see how that sort of plays through. But at the moment, New Zealand growth is okay, nothing substantial, but it's sort of picking up at a reasonable rate. Sort of waiting for the budget, and just to wait to see if we get any surprises coming out of that. I suspect they won't really be giving too much away. Again, good time to check those KiwiSaver balances just to make sure you're sort of on track to get that maximum tax credit. If you're unsure on what that is, call us on 0800 867 323. As always, if you're looking for income options, there are plenty of options available out there. And call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.